Hi everyone, this is Praise, and in this video, I'll be explaining the strategy I used to trade. So without wasting time, we'll be covering some basic concepts like what a trend is, the structure, and also cover the entry and exit rule I used to trade. So let's go into that. When we talk about the trend, we are referring to how the market moves and the direction the market is moving. So this is an example of an uptrend. You can see the market is rallying up, and this right here is an example of a downtrend. Yes, you can see the market rallying down. So that's basically what trend means. It's the direction the market is moving in overall, like summarizing all the movement. Now we can say, though there are some little buys within here, but in general, the market is rallying down. So we call that a downtrend. And this right here, an example right here, is an uptrend. Okay, now let's talk about structure. The structure is like what happens within a trend, or let's say the way we understand how the trend moves. So within a trend here, we can see the market forming structures. What do I mean by structures is that this is a low right here, and this is an high. So in reference to this low and this high, this right here is a lower low compared to this low. So that means the market is forming another low. I mean, this is a higher low compared to this low. The market is forming another low higher than the previous low. Let's take this as a start or as a preference. Then we form a higher high, then another. Let me mark that out so we can understand what I'm saying. This is a low, then we have an high, we have a higher low compared to this low. We have this higher low, then we have higher high, higher low, we have higher high, higher low, higher high, higher low, forming higher high, higher low, and so on like that. So on the uptrend, we can see new lows forming that are higher than the previous low. But on the downtrend, it is the opposite. When we take, for instance, let's take for instance this low right here, and this is an high. So from this low right here, we can see this movement to this high, but then we form a new low lower than the previous low. So that's called a lower low. Then we form a new high lower than the previous high. That's a lower high. Then a lower low, lower high, lower low, lower high, lower low, and so on. That's how the structure is on the downtrend. So now we are going to understand how to mark the structure and when to spot a break of structure compared to what has been happening. So in that way, we can understand how or when the trend is trying to reverse. Okay, let's mark that out and see. Yeah, like I said, we are having highs higher than the previous high here. So that signifies that the market is trending up. So we are going to be marking it out. This right here was broken by this body here. So, and personally, I use the close of the body as a reference. If the candle doesn't close above the highs, I do not take it as a valid break of structure. So we can see the structure continues breaking up. Yes, in alignment with the uptrend, we can see another high forming, another higher low forming, another candle is taking out, or let's say this impulse. Yes, when the market moves from a point like in a very uniform fashion, we can call it an impulse. This impulse right here is taking out this previous high. So that's a break of structure to the upside also, and that happens in an uptrend. So we are breaking to the upside. You can see this high again taken out by this body right here. We are breaking into the upside. Hope that's bold enough. Okay, we can see this high forming, this new high forming. Actually, there's a little structure here, but it's something we can just. But let's take the significant one for the purpose of the tutorial. You can see it's this candle closing above that high. We are forming an higher high. So and so until this price action right here. This is the new higher low. Then we have this candle closing above this high. Let me mark that out. So this is this is a break of structure to the upside. Yeah. Yes. Okay. The market is still breaking. Yeah. Okay. Still in the uptrend. Till this price action here, we can see this low. Like I said, it will not be considering the week. Yeah, for a valid break in structure, we are going to be looking at the candle. The candle has to close below the previous low. So this low right here has not been taken out until this point. So this right here is just weak, not the body. So I do not count it as a valid break of structure. Okay, then we have this high, this low, this high. Then we have this low again. Let me mark that out. Okay, this low, this high. We have this low again, like almost equal low, but let's call it the higher low. Then we have this higher high again. So until this point, the market took out the previous high, breaking to the upside until the previous low was taken out by this candle right here. So then we can say this is a break of structure, or we call it the change of direction. This right here. I'm going to make the candle red so we can note that it's coming to the downside. Then right there we started that's we can mark that as the beginning of the downtrend. You can see the market breaking lower. Here it's forming another new high lower than the previous high right here. So we call it the lower high. Then it's breaking lower again to form another lower low. Breaking lower here. You can see it's breaking down here. The candle closing below it, forming a new high. This candle closing, it's breaking down right here. It's closing below it, it's breaking down till the recent price action. If to save time, I might not be marking everything out. You can see it breaking down, still on the downtrend. Okay, now that's what it is when we say there is a break of structure. This right here, we can mark it as a break of structure. Where is the text? Okay, stress myself. Yeah, let's call it a break of structure to the downside here. So that's the break of structure right there. Okay, now let's talk about the entry. After marking the structure now, let's assume this was where we caught the price. This was where the market was when we wanted to when we start analyzing this pair. So now from this moment we know we've broken to the upside. Then we are expecting the price action to move, like to form an uptrend. Okay, when we jump on the 1 hour time frame to look for entries, and when I say entries, majorly I do my analysis on the 4 hour or day time frame if you want to have a bigger picture of what it is. But you can do that on another pair of your choice just to have the understanding yourself. Okay, where did we mark out? Is that far behind? Oh, quite far. So on the 1 hour time frame, I look for engulfing candles in alignment with the structure I've marked on the 4 hour time frame. Yes, I look for engulfing candles in alignment with the structure I've marked on the 4 hour time frame. Why do I use engulfing candles, or what do I mean by engulfing candles? This right here, if I can draw something, okay, this is it. When we see a candle, You see a candle like this, let's say that's the week, and let's call this a bearish candle. Yeah, that's what I'm painting. I'm trying to paint it black. And there is another candle forming that takes out the previous low that this original bearish candle formed. I painted this, so I'm trying to make it in fashion of the black candle I'm using right here to signify the bearish candle. When we see a candle like this, a bullish candle that takes out the low formed by the bearish candle and then closes the body, this body right here, above the body of, now I'm not saying the wick now, the body, above the body of the previous candle. Now this right here is a bullish engulfing candle. So I look out for these in alignment with the structure we've marked on the 4 hour time frame. Why? Because when I see a candle like this, it signifies something I call, or something known as, liquidity. What do I mean by liquidity? Liquidity is when prices is moving in fashion like this, and when there's a shift in power, and the common, let me call it the support now, is taken out, then there's a ride to the upside. This is how it happens when the big boys, or as they call them, are trying to take out majority of the people before the real move. Because this right here obviously is going to be a stop loss for a lot of traders, because they will see this as a support. Oh, price is bouncing back here, price is bouncing back here, price is bouncing back here, till the liquidity sweep. Till this liquidity sweep, then we have the up move. So this right here signifies a change in power, taking it out, then breaking above the previous highs that has been formed. So this candle right here, if it's being viewed on a lower time frame like the 5 minutes or 15 minutes, that is what is going to we are going to see. Okay, so we look for bullish engulfing. Like I said, it marks a change in power. It shows that the bulls are ready to take the ride, in alignment with the structure we've marked on the 4 hour time frame. Okay, right from this moment here, we know we've broken to the upside. Then we start looking for the bullish engulfing candles to enter. Okay, not to form. This is one. I think this is one right here. Did it close below it? Yes, it's close below it, like a P below a little. This candle close below it. So that's a bullish engulfing candle right there. And that's a good entry for us. So we just, at the close of the candle, a little below. So that's 10 pips. And my entry now, let's explain the entry. My entry is based on this rule, the fact that I don't risk more than 0.5% of the capital on a particular trade. And that 0.5% is going to be split up into two. Or when you're using other trading platforms that allow you to close a part of your position, you can do that. But using trading platforms like the MT5, MT4, this 0.5% will be splitted into two. So that makes one trade 0.25 and the other one 0.25, but still the same entry. So we'll be closing one at 1:3, then we'll be closing the other one at 1:5. So if you do the calculation well, overall we'll be having, at every 1:5 run that the TP was hit, we'll be having plus 2%. Yes, because after the 1:3, we get 0.75 closed. And then after the one, and then if this other one continues and break the 1:5 TP, we have 1.25. So that's 1.25 plus 0.75, that's 2%. So we do 1:5, and after every 1:5 win, we get plus 2% on the account. Okay, for this instance right here is a perfect entry for, as we can see. And also I tend to close, or I tend to break even when the price is running 1:1 in my direction. So from this moment right here, this 10.44 pips stop loss. Once the price has run 10.4 pips in my direction, I break even. So let's see if the market came back to test the entry after breaking even at 10 point 10 point, okay, that's like 10.3, 10.4. No, it did not, because right from this moment right here, moved up, we didn't reach 1:1, so I'm not breaking even. Then it came back again, went up 1:1, and from this moment right here, from this instance here, my stop loss is already here, is on the line here. I'm even on this trade already, so it's running risk free till I close the first position at 1:3, and the second one at 1:5. Okay, let's just put it that way. Also, then yeah, we start looking for bullish engulfing again. This right here is a perfect instance also, because we can see the candle closing. We can see the candle taking out this bullish candle. The body is closing above the previous bearish candle, and the wick is taking out the previous wick. So that signifies a change in power right there to the bull side too. So we go for the entry again. And by the way, I don't do more than 20 pips stop loss. If the candle is too large, this is 11.4, very nice. Then we go 1:5 again. We look for 1:5. Let's see if it hits 1:5 before turning back. No, don't go up on me. Oh wow, 4.96. That might not be up to 5. I might have closed the first one, and on the second one probably be taken out around here, or there is possibility that the TP is it, because this is like 4.96. So let's just take that as this is plus 2 here, plus 2 here. And mind you, you'll be taking losses too. There'll be a lot of losses too. But the goal is, in general, in overall, we'll be having more profits compared to the losses. That's when we say strategy is working. Okay. So from this point right here too, there is no bullish engulfing. There's no bullish engulfing till this takes it out, but it does not close above the black candle. So we cannot take that. Okay, there is another one right here. There is one right here. There is one right here. There is one right here. Okay, let's see how wide the stop loss is. Just like, okay, that's like 8.6 pip stop loss, and we go for 1:5. Still we didn't hit the 1:5, but obviously we'll be hitting the 1:3, and the second one might be closing around here because I might have covered this. So let's say we get the 0.75 plus 0.25. Let's say we do 1% on this plus 1% on this trade. So in general, we are like 2%, 2%, 1%. We are like 5% up. And till this moment right here, we'll still be looking for, till this point right here, we'll still be looking for bullish engulfing, because on the 4 hour we are still bullish until this low right here is taken out, was taken out by the candle here on the 4 hour time frame. We went to the 4 hour to do the markup, so we'll still be looking for bullish engulfing. Let's see. Oh, is there anyone there again? Takes you that does not close above it. Yes, this is one here. This is one right here. But we can see this obviously is a loss. So let's place the candle on it. Enter after the close of the candle with the stop loss above it. Yes, that's one loss on it. So we are down to like 4.5%. We've lost 0.5 on that position. We're still looking for bullish engulfing, bullish engulfing. This is an engulfing candle here right here, but this candle seems to be too wide. If it's more than 20 pips, then you can see it's even far. That's like 43. No, that's too much. That's too much of a risk to reward. So the position is not valid. Look for bullish engulfing. I don't think there's any return here again till this moment right here on the 4 hour. Then we start looking for bearish engulfing. So if you go back to the 4 hour, we can see this candle right here. After the close of this candle, then we begin. Okay, I think it's happened right here. Yes, after the close of this candle, prices are formed right from here. We start looking for bearish position. Let me just mark the beginning of the candle. So from the 1 hour time frame, we know where to start looking at. Okay, let's mark it from the top of this candle. Yeah, let me just point it down a little. So okay, now back to the 1 hour time frame. We're far too back, but we can mark the whole thing up to the recent price action, and you see you'll be taking losses, but obviously you have a better understanding of how the strategy works. Okay, right from that instance right there, start looking for, and this is one for me right here, not too far from it, not too far from it. Enter after the close of the candle. This is now we are looking for bearish engulfing now. It's just the flip side of what happens on the bullish side. So doing 1:5, I'm obviously out on 1:3 here, but going for 1:5. Let's see. You can see the price going. It takes a long period of time. And this is an hour candle, and this happens to be a lot of candle. So it takes its duration for you to, if you have the patience, like I said, it's playing out. In as much it's not coming back to your entry or your protected high or low. That's it right there. If that's not too wide, but within it, there should be positions that are valid too. Okay, but let's just say you take the 1:1, then you break even on, or you just close the other position. It's left to you. But personally, if okay, let me say at this point right here, that is breaking a little breaking to this upside, breaking this little high to the upside here, I might close the position right here. I might have protected the position at this point right there. So I'll be doing like, we had up 4.5% before, so I'll be doing like probably after the 0.75 plus, let's say 1:1 again. That's like plus 1% overall on this trade. So that makes us up by 5.5%. Okay. Then this is another entry too. I think no, that's not the right one. Okay. This is another valid entry too. That's an engulfing candle right there. So let's look for a 1:5 or 1:3. Okay, obviously we get the 1:3 right there before the reversal that went to took us out. Then we might just we break even after the 1.1%. So this obviously did not come back to the entry until it hits the first position TP. So we are up 0.5% on this, and the other one is even. So I think we were up 5.5 before plus 0.5. That makes it like 6.25. In short, that's just how the thing works. And you see, this is another entry right here. I hope the candle is not too large. And this is another bullish, bearish engulfing right here that we can take the ride off. This is another one here. This is another one here. obviously there are going to be this. Okay, you might be even on this after taking one ratio one. I think it came back to the entry, so that's going to be an even. This is one right here. This might be a loss. Yeah, you can go ahead and mark up the pair of your choice and do the analysis. Hopefully you find this content helpful. Don't forget to subscribe and also hit the notification button, so when I go live in the morning you'll be notified for analysis, and also in the evening for the recaps. Thank you.